Boom, what's up Waves Capital? It's Royce Jacob and welcome back to the channel. In this video, we're going to be talking about how fear has officially made its way back into the markets and unfortunately how the macro picture is looking pretty bleak as we approach some very key inflationary and economic data. Okay, so we're going to keep this one short and sweet, you guys. I'm sure you're all aware that the markets are pretty ugly right now, and the bears have really taken the reins over the past few days. But as many of you know, I am an optimist by nature, and when it comes to my trading and my analysis, I am contrarian a lot of the time. Okay, so I do want to talk to you guys, of course, about why the picture is bleak, but I don't want to make this video bleak. I want to paint the most optimistic picture possible, if that's possible, and talk to you guys about why I'm still choosing to position myself and position my portfolio in a bullish fashion. Okay, so we have a lot to cover, you guys. Again, short and sweet. The only thing that we're going to be doing in this video is reading over the newsletter that I wrote for the portfolio and newsletter group this morning. Okay, I spent a lot of time on this, and I just felt it was right to read over it for you guys and all the YouTube viewers who may not be a part or member of Waves Capital yet. So I'll read over this. Again, really kind of just did a full macro breakdown and gave pretty much all of the necessary opinions that I felt were worth sharing in this newsletter. So let's read over this, really just cover some ground in terms of the macro. And of course, I'll expand whenever I feel it's necessary. Okay. No charts today. I will leave that exclusive to the newsletter and portfolio members. All right, so it's Thursday, and the sell-off continues to snowball as investors digest Jerome Powell's words and await the February jobs report tomorrow morning. If you're watching it at a later date, for reference, it's March 9th at the time of recording. Markets, even after close, got way bloodier. Okay, you guys. So, as I've said many times before, I've said many times before that I believe the majority of potential Fed intervention was already priced into the markets, but that evidently isn't the case. Honestly, though, I don't think it's the rate hikes themselves that are scaring investors. It's investors being afraid of other investors being afraid. So remember, you guys, markets are always ultimately a game of psychology. Yes, technicals matter a lot, fundamentals matter a lot, but it comes down to how you trade things and really the way you front run specific, mostly technicals, I guess, the way you can front run technicals and fundamentals at times as well is having that psychological understanding of the markets. And like we've been saying a lot, understanding emotional cycles. Okay, so don't fight the Fed is a cliche in the financial world for a reason. And we're being unpleasantly reminded of this cliche now. Speaking of fear, I'm sure none of you are surprised to see that we've officially re-entered fear territory on the Fear and Greed Index. So as you can see right here, you guys, this is just a screenshot I took of the Fear and Greed Index. If you're unfamiliar with this index, if you're newer here on the channel or Waves Cap, just Google it and you will find it. Okay, but this is it, and you can see on the right here next to the index itself, or next to the meter itself, I guess, is dating back a week, a month, and a year. So it's been volatile, but volatility is to be expected in this confusing macro environment. As I said yesterday, I don't think investors should be feeling greedy, but I don't think there's a reason to be feeling fearful either. The quote from the Oracle of Omaha himself, which I'll drop below and read for you guys right now. Be fearful when the markets get greedy, and be greedy when the markets get fearful. Warren Buffett, one of the greatest to ever do it. Okay, so when a certain belief becomes consensus, it's typically time to steer in the opposite direction. As of now, 90+% of investors believe things are about to get much worse. And honestly, you guys, rightfully so. Things aren't looking good. And I want to reiterate the fact that I could absolutely be wrong about my take and this entire opinion. Okay, so keep that in mind. But again, I'm choosing to take the bullish stance, and that is why I want to share this with you guys. So although it's entirely possible that they're right, I've learned that the contrarian approach when sentiment is skewed in one direction, heavily skewed in one direction, is the more promising route to take. We have the February jobs report being released tomorrow. So Friday, March 10th, jobs report coming out. Big deal. And the February CPI data, which is a huge deal. It's a massive catalyst in either direction. 100% that's to be the case, which is being released on Tuesday, March 14th. So you guys, that could be a date of great joy or of great reckoning. So as of right now, just considering the markets got so annihilated over the past couple of days, I have to believe that as far as surprise is concerned, because general consensus, once again, is so bearish, is so pessimistic, everyone's expecting super hot jobs numbers and really inflation heating up again, which is what I just said right here, so I won't read that. I think in terms of surprise factor or shock factor, that really does lend itself to upside potential as opposed to downside potential, because as of right now, I feel like the worst case scenarios are being priced in. So again, shock factor lends itself to the bulls. Okay, as always, could be wrong, but this is the risk that I'm willing to take on. To those of you, this is a little PSA, you guys, and this goes for the YouTube audience as well. To those of you who have joined Waves Capital and may be down on recent trades, I'm sorry. I do my best to make the most optimal decisions, but as many of you know, I'm not immune to being wrong, and nobody is, you guys. Everyone, the best traders in the game, will be wrong. I never claim to be the best trader. I don't think I'm the best trader, but I do know I do my best, so that's all any of us can do. I'm a trader, not a fortune teller, all right? I've said that before on the channel, and it's important to reiterate. Sometimes when things are going really, really good, and then, the script just flips real quick. Again, I don't think the script has flipped completely, but that's how it can feel when, you're just involved in a volatile market. It's just emotionally taxing sometimes. So once again, I am a trader. I'm not a fortune teller. Sometimes it can't seem that way, but you should never think that of yourself. Never let your ego get out of hand, because that's usually when things start to go downhill. So when it comes to decision making, all I or any of us have is our experience and the data available to us at that moment in time. Sometimes it works wonders, but sometimes it falls short. And that matters. And all that matters to me is that I'm constantly growing and evolving as a trader. And I hope that all of you do the same. It's never a loss if you don't quit. So just make sure you don't get cleaned. That's an important one, you guys. Again, that's why you never over leverage yourself, or never put your entire cash stack into some options contracts that expire this Friday. Never do that. Okay. So quotes, I've been saying this a lot over the past few days, but that's because it's just resonating with me right now, so I'm sharing it. A smooth sea has never made a skilled sailor. That's from Franklin Delano Roosevelt. And I'm sure most of you have heard that, but it's a Waves Cap, so it's a little more applicable to us, I guess, or just like makes sense given the nature of Waves Capital. All right, so smooth sea never made a skilled sailor. Kind of a tongue twister. Hardship builds character, you guys. Always remember that. That's a saying, hardship builds character. That's something my dad told me when I was a young kid. That really stuck with me, and I do attribute a lot of the success I've found today and over the course of my entire life and all the ventures I've taken on to that. Because, if things were easy, everyone would do them. Things shouldn't be easy. Making exorbitant amounts of money shouldn't be easy. They are sometimes, but to do it consistently over a long period of time and to make a career out of it, that should not be easy. That should be very, very hard. Okay, that's the nature of life. That is the natural balance. Hard things usually attract more value or more wealth, whatever you want. If you work hard for it, regardless of whether it's financial gain or, relationship gain, you got to work hard in a relationship to have a successful relationship. Okay, so this principle parallels to many aspects of life. We're involved in the markets. We're talking about money. Okay, so lastly, PS, for those of you who have been on the team since 2022, just remember that we're still well up over 10%, 10x, it's 1,000%, 10x on the year in terms of profits, and I'm proud to say that does hold true. We took a lot of profits on wave one, so, as much as we've lost over the past just few sessions alone, as dented as the portfolio has gotten, we're still way up on the year. So like crazy up. Okay, so that's something to be thankful for. It can help to remind yourself of the W's when the L's start stacking. Okay, always a winner, you guys. Remember that. So before we dive into trades, I want to explain to you what would have been the smart way to structure the options portfolio following C3's massive post-earnings rally that we saw on Friday. So before we do this, you guys, if you do want the daily newsletters, if you want the price targets newsletter that I'm about to write right after this, where I cover charts on C3, Veritone, the S&P 500, Bitcoin, Riot Blockchain, all of our other AI plays, and I actually introduced a new face to the portfolio that's pretty unexpected. So if you guys don't want to know what that is, if you guys want the complete breakdown of my entire personal portfolio, you want to know exactly which call options I have, how I'm trading them on a daily basis, that's the first link in the description box. You can try it free for 7 days, or just pay $15 a month for it. It's completely up to you, but if you want to join Waves Capital for real, if you want to know what I'm doing on a daily basis, and again, one of these daily newsletters that I do work very hard on, I personally have zero guilt in saying that $15 a month is worth it, and that's kind of the point, you guys. That's what I want to make it as accessible as possible. Okay, so anyway, back to this. Appreciate if you guys joined Waves Cap. If not, I appreciate you watching this, and I hope this brings you a bit of solace or optimism, because the markets are bloody and it's easy to feel super down. Regardless of how bullish you are, it's always critical to hedge your bets, and as of these past couple weeks, honestly, I've broken my own rule to do so. Ideally, we should have used some of Friday's profits, because we made a shitload of profits on Friday, but a lot of you know that, to create a short-term hedge position on AI. Something like C3 AI Inc. $25 put 317 expiration, which is a very, very short-term call option, okay? Or put option, I'm sorry. Very short expiration to have on contracts that you're trading. Especially, always, you guys, always say this, 45 to 60 days out is optimal. If we did so, they would have printed for us, which we could have used to purchase more $421, $25 calls. That's one of my largest positions personally, as they've gotten smoked over that same period of time. I do my best to practice what I preach, and if I'm displaying such confidence in something, which I am with C3 and other AI stocks, I want to mirror that confidence in the actions and the portfolio. And if I'm wrong, I feel that I deserve to lose. So again, you guys, I don't want to just be saying all this stuff and then at the same time be like heavily hedging my positions. If I'm saying this and I have conviction, which I do, and I could have traded it so much better in retrospect. Everything is 2020 in retrospect. You're going to be saying that a lot to yourself if you actually stick around in this game and trade a lot. But that's the game, you guys. And especially when I'm talking to you guys on the channel, or I'm like talking about these price targets in the newsletter and stuff, I want to trade on that. It doesn't show my conviction, or it doesn't convey the conviction that I have if I'm just, again, heavily hedging my bets, which again is, in retrospect, obviously the smarter decision. It would have panned out so much better if I did that. This is, I want to make very clear, the smart thing to do, even especially when you're playing earnings before a Fed meeting or before, or again, Jerome Powell's speech. Just picking up a few puts to potentially hedge the downside that comes from the fundamental catalyst is always the smart thing to do. So to be honest, if we do see a pop, I'll probably pick up some short-term hedges in the case of the CPI data next week absolutely tanks the market. But again, you guys, this is just my rationale. Once again, I don't claim to be the best trader ever. I definitely don't claim to be the smartest trader, but it is my job, and I'm good enough at it to have made it my career. There we go. So let's close this one out, you guys. I'm telling you guys this in hopes that you can use this information in the future. It may be too late for this one, but trust me, this strategy will come in handy many times over the remainder of the career. This is a long game we're playing, so just stick with it, team. All right, so this was, again, I wanted to cover upcoming macro catalysts, jobs report tomorrow, CPI data release from February, of course, on the 14th, on Tuesday. But again, I just wanted to give you guys hopefully a little glimmer of sunshine through these massive rain clouds, because the markets are bloody. It's no fun, especially when we're coming from such a strong week. Friday was blockbuster for Waves Capital, and it sucks to have the next few sessions pan out this way. But again, you guys, that's the nature of the market sometimes. That's just the nature of the beast. And you do your best to learn and grow from what you've done wrong and apply those wrongs to the next time around so you get them right. Okay, we'll call it there, you guys. I appreciate you watching, and always keep your heads up. Okay, let me know in the comments down below how you're feeling, and you can always find friends down in the comments. So everyone be nice to each other downstairs, and I'll catch you all next time. Until then, always remember, take action, make waves. Peace.